Welcome to the Jill on Money podcast. It is Monday, August 16th. And you know what's so great? I'm on vacation. But because Mark's such a nudge, I had to still do all of these shows. We pre-recorded it, but you will get a show every day of my vacation. I promise. No days off, at least according to you. But I am taking time off. If you've got a financial question, send us an email, askjill@jillonmoney.com. Or you can go to our website, jillonmoney.com, and hit the contact button. While you're there, sign up for our free weekly newsletter. We would love that if you did that. Mark sends it out every Friday. So remember, what do we love the most? We love hearing your voices. So when you send us your question, please let us know if you would like to come on the air live with us. That is what Shirley did. She wants to talk about her 401k options. Hey, Shirley, how can we help you out?
Hi, Jill. Thanks so much for taking my call.
Sure.
I am kind of in a dilemma right now. I'm trying to make the decision about whether to do my 401k contributions on a pre-tax basis or using the Roth option that my employer offers.
Okay. Tell me a little bit about yourself. Married, single, and how much do you earn?
I am a divorced woman. I am about 47 years old. Mm-hmm. I make about $70,000 a year. Mm-hmm. I kind of have a mix of retirement savings right now. So when I retire, I'm going to have a real diversity mm-hmm. of income streams. I'm going to have some defined benefit pension. I'm going to have, hopefully, Social Security. But I also already have some, I have a Roth 401k. I have a couple traditional IRA options, and I also have a 457 deferred compensation plan mm-hmm. account. So I'm just trying to weigh my options and figure out if it makes more sense for me at this point to really invest in the Roth 401k option or if traditional would still be better.
Okay, so let's just run down to some of the numbers, though. In Roth assets, how much do you have about?
I have about $140,000 in Roth assets.
Okay,
right
and how about the traditional IRA?
Yeah, with the traditional, I'm going to kind of lump my deferred compensation plan in with that, if that's okay.
Yeah.
I'm not sure if that's correct.
Yep.
But I have about $300,000 in all of those other accounts combined, mm-hmm. not including the defined benefit pension.
Gotcha. Okay. And right now, how much money do you put aside, and how much money is going into this potential either Roth or traditional retirement account?
So for the 401k account with my current employer, I have been contributing the 8% mm-hmm. Of my salary, so about $500 a month, into the pre-tax plan.
Yep.
I recently got a raise, and I figured out that I could afford, with my monthly cash flow, I could probably afford to contribute about 10% if I contributed on a pre-tax basis. But if I contribute to the Roth 401k, I can really only afford to contribute the 8%.
Gotcha.
That I'm currently contributing, which is the maximum that my employer will match.
So just a frame of reference for the defined benefit plan. Do you have an estimate about how much that would be, whatever, 20 years in the future when you retire, about how much income you would get from that?
I have a really, really rough estimate at this point. I'm still too young to get, an official estimate.
Yep.
I'm estimating it'll probably be around $2,000 a month. Mm-hmm, but
mm-hmm.
That's kind of a rough estimate at this point.
So you're in a funny situation. No, not that funny. Interesting situation because you're in a tax bracket right now, the 22% tax bracket. So I think you are better off doing a 401k on a Roth basis, because you'll lock in a tax liability that I think is probably going to be lower than where you'll be. At the worst case, it'll be the same. And best case, you'll pay a tax at this 22% rate today. And when if for some reason your taxes go up in the future, you've kind of made a great trade. You've paid taxes at 22%. For all you know, it goes back up to 28%. So I think I'm going to choose the Roth option for you today because
Okay.
I just think first of all, you already have a lot of money, as you said, 300 grand or so saved. You're going to have income between the defined benefit and the Social Security, not to mention the fact that you'll have to take money out of that traditional structure. I would like to have as much money as I could where I already know what my tax liability is going to be. I think you're in great shape. I would do the Roth. Don't freak out about like I have to do a little bit less. That's the smart thing to do. So do the Roth option.
Okay, great.
All right.
That's exactly what I wanted to know.
If you, like Shirley, want to appear with us, all you need to do is send that email, askjill@jillonmoney.com. And if you're on the website, hit the contact button. Mark does the rest. Don't forget, if you are not subscribing to us, do so wherever you're listening to this podcast. Maybe it's Apple or Spotify or Stitcher or Odyssey, wherever you find your favorite podcast. Follow us. You won't miss a single episode. And don't forget, you can subscribe to our sister podcast. It's called Eye on Money. Okay, so the week has started. Try to lift someone up today. And don't forget our mantra of 2021, grit, growth, grace. We'll talk to you tomorrow.